Hello. Hello, everyone. Welcome back to welcome back to FOW Japan. I'm Joy Teo of Global Investor Group. Now comes our final panel of the day to discuss trading technology advancement, which is very crucial to improve liquidity and accessibility to Japanese market. Moderating the panel, I'm delighted to welcome Sean Lawrence, the Senior Sales in Société Générale's Equity Derivatives Prime Sales Origination team. Sean has 30 years of experience across high frequency and speed trading solutions, IT, risk management, clearing, and settlement. Sean is currently based in Hong Kong and has previously worked in Japan, Australia, and UK. So to discuss this topic, Sean is joined by the experts from Fidelity International, Flow Traders Asia, and JPX. Unfortunately, Jonathan of Citadel Securities is unable to join the live panel today due to COVID-related travel disruption. I hope we can hear his view in the future. Again, to interact with speakers, we encourage you to ask questions throughout the session via Q&A function on the screen. Please note that every session is being recorded and will be available on demand. Without further ado, I'd like to hand over to Sean to get started. Sean, over to you.
Thank you, Joy. And thank you to FOW for hosting the event and asking us to come and present this session. As you heard from my introduction, I've been around trading technology, particularly the high-speed technology space, prop trading firms and those kind of things for a number of years. So I'm happy to be moderating the panel. To start with, I'd like to introduce the panelists and I'll invite them to give a brief intro of them and their positions in the company. So if I may start with Lucy, would you like to introduce yourself?
Hello, everyone. I'm Lucy Chen from Fidelity International. I've been working from the Fidelity across different offices, starting from Taiwan, moved to Hong Kong, and now relocate to Japan. So actually, all in the equity business, and then across the region, the trading practice, regulatory things, and special cases, I can all talk about the equity side. And we're starting to have the ETF and the derivative trading. We can touch about that as well. Yeah, that's from me.
Great, thank you very much. Next, Yamada-san, would you like to introduce yourself?
Hi, thank you, Sean. Hi, everyone. My name is Takeki Yamada. I am working at Flow Traders based in Singapore. So what we do at Flow Traders, we are a specialized market makers in ETF. So we price ETFs on screen and also off screen as OTC trades directly to institutional investors like Lucy and all other investors, and also to investment banks and brokers. So as an institutional trader, my role is to actually face and interact with these institutional investors when they want to buy or sell ETFs in block size. And prior to Flow Traders, I have been at Nomura Securities, so as a sales trader. So I've been facing institutional investors in Japan and also in Europe when I was based in London as an expat. So I've been around the equity space for quite a while. Thank you.
Thank you, Yamada-san. And then last but not least, probably a man who doesn't need so much of an introduction because he's quite well known, Matthias, would you like to?
Yeah, hopefully only for good reasons, right? But yeah, thank you so much for having me, right? My name is Matthias Rietig. I'm in charge of the global sales effort for JPX, OSE, and most recently also for Tocom. And I'm based out of Singapore, but my role is global, so I speak to global trading firms, mostly buy side or end users, as we call them, right? So that could comprise anything from big hedge funds to small prop firms. Yeah, I'm happy to be here today and I look forward to a live discussion.
Thank you very much. And thanks everyone for agreeing to participate and sharing sharing your views. If I can kick us off with a kind of general question, and maybe to kind of set the scene, if we look historically, Japan has occupied a preeminent position in the world of finance. Everyone historically would say the financial centers of New York, London, and Tokyo. And so from that perspective, there's a lot of historic prestige and a historic claim to be, one of the best, and certainly probably the best in Asia historically. Certainly, the market is absolutely liquid, very deep. It's a key center, remains a key center for both trading opportunity and risk management. So all of these things, I think everyone, will agree on. However, at the same time, I think as the world has developed in terms of trading technologies, there is a question, about Japan, and really it's about looking forward to the future. Certainly there are still some inefficiencies. Certainly there are still some anomalies, maybe not so different anomalies as you see in other countries that have specific rules, but certainly there are still some anomalies that exist in Japan. And so the question is, is Japan really setting itself up to be the leading financial center of Asia, as it's stated that it wants to be from a government policy point of view, and therefore is it, really ready to defend itself against, the rising positions of more populous but less developed countries. And so with that, I'd like to open it up to the panel just to say, in kind of brief summary, what you think are the key kind of highlights of Japan equity and derivatives markets, both pros and cons. And perhaps maybe we'd start with Yamada-san, if you have a view.
Yes, thank you. So as a specialist in ETFs, from my point of view, looking at the ETF market in Japan, the market has developed very impressively during this 3-4 years, especially. So when I first joined Flow Traders back in 2017, and comparing it now, 2021, now the ETF market has developed, especially in more wide asset classes, including foreign equity and fixed income ETFs. So those in that perspectives, this market has developed, and also thank you to JPX with the efforts on these development programs. And I would like to also introduce or speak about the connector platform. So this is one of the new RFQ platforms, which is it's an off exchange trading platform, but it's crossed on exchange. So institutional investors can send for a request for quote when they want to sell or buy ETFs, and then market makers like us and all other market makers would provide a quote. So in that terms, the liquidity of ETFs have increased in specific ETFs.
Thank you. And ETFs, I think, is something, and in the growth in Japan, is something I think we probably want to touch on, some of the questions. So I'll come back to that if I may, because I think it's a good, example to kind of talk about, technology development. But before we get there, perhaps Lucy, you want to give us a perspective? Lucy, maybe on mute if you're there.
Sorry, as Sean just mentioned earlier, that Japan is one of the most liquid market across the region, and also the trading cost is actually relatively low. So there's no stamp, there's no sales tax for the participants, and the spread is actually relatively lower. And in that sense, actually, Japan attract a lot of different participants in this market. So for us, the only companies, we actually think Japan is easy to access, but it's not easy to source a big percentage of the block size of the liquidity. So that probably because of different participants and probably because of the microstructure in this market as well. So that's what I want to focus on today.
Great, thank you very much. Yes, interesting points as well about the the difference between the functioning versus access. And perhaps if I can come to Matthias next, and indeed, I think it's fair to say, Matthias, the JPX has done actually quite a good job of trying to promote and trying to push forward. And so I'd be interested in, of course, that's relatively well known, but at the same time, there are some challenges. So your perspective on the pros and cons of current status.
Yeah, thank you very much, right? Yeah, obviously we did a lot, but there's more to do, of course, right? There's no question on that. I would say in comparison to the other regional markets, especially Japan is quite different with regards to the depth as well as the maturity of the ecosystem, right? I think that's a big pro. Because obviously most of the economic agents, right, in Japan, there's a strong domestic amount of participants, a large amount of business in the market, as well as a global interest, with Japan being a G7 country, right, one of the largest economies in the world. Yeah, all this kind of like coupled, as you say, I'm very happy that we, since this is a tech panel, right, that we managed to launch JGate 3.0, right? And it's kind of best of breed technology, right, that comes to Japan. I don't think that we have to be shy about the technology aspect with regards to the market itself. But of course, there's certain features and things to add, right? And yeah, we're in constant dialogue with everyone to continue to improve these kind of things, right? So nothing is perfect, but it's work in progress. And I do think, of course, something as dynamic as market structure is always evolving, exchanging, right? I mean, obviously we have the challenges that are similar to other markets globally, to other regions, right? Like the rise of PTSs, as well as generally keeping track with the demands of the buy sides, right? As well as the change in trading behavior, right? But yeah, plus minus, I think Japan is on a good track, and there's a reason why Japan is one of the anchor markets in Asia.
Thank you. And this, the involvement of technology, and all those kind of good things is true. And then if I can perhaps choose a specific topic within that we might like to kind of focus on, which is new product development. And I think it's fair to say that the JPX has done quite a good job of trying to develop new products and list on the derivatives side. As Yamada-san noted, the ETFs, I think, was really driven by the JPX, and it's helping assisting, engaging with the asset managers and the authorized participants, trying to bring everyone together and doing lots of good things. But from the point of view of the innovation cycle, some people say that it's a relatively slow event, and most importantly, when things are deployed and they're not quite right and then quite fit the need, is how quick it is to adapt to those. And I'd like to throw that back to Matthias to start with, to kind of get his perspective on that.
So you want to hear the official version, or you want to hear my own personal opinion on this? No, I'm jokes aside, right? Obviously, it is challenging, right? Giving at the end of the day, exchange, we always want to be as innovative as possible and as close to the market as possible with regards to covering all the needs and demands from our participants, or even be ahead of the curve, right? And on offer products that they may not even see themselves. But the problem there is always, obviously, at the end of the day, we're some sort of common denominator where everybody meets. Right? So we have to be really, really aware of the member readiness in that regard, and make sure that everybody in the whole ecosystem is able to participate. So I wouldn't want to, it's kind of a concerted act at the end of the day, right? So we all need to work together to bring the products to market, right? And that of course involves the whole chain of a front, middle, back, right? Of course, sometimes also, yeah, things look good on paper, but then there are other vested interests, like, for example, the race to zero with regards to trading fees, right? For example, if you have online brokers that monetize that because they're kind of forced to do so, right? That even if they were willing to support our products, they may have other things on their plate which they have to deal with. And finding a good balance there and strike the right things at the right time is pretty much key, I think, with regards to product development. But yeah, I think also what is one thing that certainly could be, and that's maybe a bit of a cultural thing, right? In Japan, is that things have to be a success by all means, right? And if we look at our peers globally, for example, many of them list hundreds of products, right? And then only maybe a handful of them work, right? But they have a handful of these products that work, right? So in our case, we always have to be very, very careful and in that sense, yeah, innovation doesn't look as dynamic as it should be. But yeah, we're working very hard to improve these things, especially also, of course, bringing products to the end user and making sure that the distribution channels are ready.
And I think you and I have spoken about over the years about the momentum that is needed to be able to kickstart a product, the number of people that you really need to bring together to get involved, which is often not so easy because people have got priorities and they've got other projects and things to work on. So I appreciate it's quite a challenge. But maybe on this topic, I ask Yamada-san or Lucy, do you think that there should be more product diversification, more new products that are listed, or do you think it's about right, or we should have less? Perhaps Lucy, you have a perspective.
I think JPX actually do a really good job. They actually open up a lot of things, but as people all know, every time we need to introduce a new product, it takes a longer time, and it's going slower. And I totally agree. Earlier, the panelists talk about we need to have the demand, and then we starting to promote these products. So probably outside of the ETF talk, I probably want to think about whether if we have a single stock option, that kind of business, because Japan currently is like probably since 1997, we probably only 100 names have a single stock option, but compared to other mature market in UK or US, we actually a lots of less. So if we want to attract a real the more of the participant in this market, probably we can look at that thing, and we can do kind of hedge. Yeah, that's what I want to introduce. And also, I think JPS actually doing another TSE reform fee. That's actually quite interesting. So how the listing company become a new category, that will be a new structure as well. So to copy on that reform of the TSE, we probably need another kind of a different benchmark indexes for the different type of fund to follow up as well. That's my 2 cents idea.
Great, thank you. It's an interesting point there. And then maybe moving on to the next question at the same time. So Yamada-san, there's this question of new products and the speed at which they are deployed and or adapted. And then there's this other question about new platforms. So you mentioned the connector platform before. JPX has created also the JNet portal, which I think has been quite successful in automating what was previously quite a manual, voice-based activity. What do you think about, let's say, new products issuance, but also new platform delivery to make things easier? Yamada-san, what's your view on that?
Yes, so this new platform connector, it was launched February this year, and the beginning it started slow because as a common Japanese cultural thing, they first just do the look and see and wait and see stance, and they're not going to just jump right on and start trading. So all the investors were kind of seeing what others are doing or waiting for the stats, and then after a couple of months, now we're starting to see like 50 million USD size trades going on, especially on the fixed income ETF side. So yeah, so now it's kind of really growing, and I think it's a common thing for Japan that people once it starts rolling, and then people are concerned about what other peers are doing. So if I'm a buy side trust bank or a asset manager, I would be quite concerned of what other trust banks or asset managers are doing, and then want to follow what they are doing. So I guess once you cross that tipping point, then people would also follow what others are doing. So I think it's kind of important to keep that in mind and make sure you have the early adopters get going, and then also use that to promote to other investors and make them think that, yeah, this is the new way to go. And I think Connector is doing a pretty good job on this so far.
Okay, thank you. And then, following that, Matthias, I think, a number of years ago, you and I had a conversation about making life easier, and you had observed that it does take money and it takes energy and investment. And yet in the last 5 years, JPX has done a lot of interesting things. Like I say, there's JNet, there's and JSCC, which is kind of part of JCC's ETF creation redemption facilitation facility. It seems as if JPX and exchanges in general have realized that to help participants in order to help the JPX is a more productive strategy. You've got a kind of reflection on that, costs, how much energy it takes to kind of do these kind of things?
Yeah, of course. I mean, we're very grateful for all the support in the overall ecosystem, right? At the end of the day, it's a scale business, right? And the integration of Tocom, for example, was another one of these things, right? We migrated the whole market, right, including clearinghouse. Yeah, step by step, I think we're getting there, right? I mean, we were still in the process of creating the whole, as I call it, like the unified exchange concept, right? Which was a concept that is over a decade old already, right? And from that perspective, I think, yeah, we're quite happy that we can go there and then where we are. But obviously, again, right, you cannot stop here, right? The question is always what's next. And I do think that the innovation won't stop, right? I mean, there's a lot of new things coming out, right? Obviously, I mean, there's a lot of chit chat about like how tokenization, digitization, all these kind of things, and how markets will look in the future, right? So we have to keep abreast of these changes and then make sure that we stay on top of these things, these developments, in order to also cater to the needs. Because at the end of the day, as you know better than I do, all these things are client driven, right? And we want to make sure that we cater to their needs.
That's right. Yeah, and as the world is about to change quite significantly with digital distributed ledger technology and those kind of things, I think it's going to be an interesting time for the next 5 years. But anyway, we might talk about that a bit later on in some of the market structure kind of topics. But staying on the technology project side of things, we see these things happening in Japan. A lot of it very good, a lot of it forward thinking. But maybe it's worthwhile to compare to the rest of the world and see the direction that Japan's traveling in and how that compares to other parts of the world. So perhaps maybe Yamada-san, do you have a reflection upon how the function of Japan from technology and products and innovation, how it compares?
You mean compared to other markets in the world?
Yeah. So let's take the ETF market in the US. Diversification, technology, how the market functions there versus here.
Yeah, to be honest, I think so for example, in the ETF world, people tend to think that US is the biggest market. So you take SPY US, that's the largest traded single equity product in the world. So it is traded, but then if you kind of look at it more carefully, these it's not actually, it's the whole, if you take the whole volume as 100%, then it's actually like 30% traded on OTC. So it's not everything on exchange. So a lot of these are traded outside of the primary listed exchange. And if you, yeah, in that means it's quite, yeah, it's important to understand that it's not, US is not like it is the dominating world market, but you take Japanese ETF market, you can, it still has the potential to really trade these volumes even in Japanese hours, because like I mentioned a little bit earlier on the growth of these ETF volumes, a large portion is on foreign equities and fixed income ETFs traded in Japanese hours or Asian hours. So for Asian investors who trade currently, the US market has to wait 12 hours and usually execute in the US markets. But then now with the technology and platforms and the access to market makers or liquidity providers, Asian investors can just trade even US listed ETFs or Japan listed US equity ETFs during Asian hours. So I think these technologies are enabling a lot more than what people or investors have imagined in the past 10 years or so. So it's growing, but people still have not noticed it's fully capable of. So I would think it is still, Japan market looks like it has still a lot to develop, but then the potential as well is quite enormous. But then this, I'm kind of focusing on US equity. So you're relying also on the US futures volume. So then if you kind of focus on the Japanese equity side, then there are market microstructures that need to be worked on, and I guess JPX and everyone is working on, and we, I guess, have to keep pushing this to make it a better market.
Thank you. And I think in some regards, comparing anywhere to the US, because the US by its nature is very forward thinking, and that comes with some challenges. And when we look back, say 15 years, when people were coming to Japan, they would say things like, "Oh, this looks like the US in the 1980s or the 1990s, in the mid-teen, mid-noughties." And so, Matthias, kind of a loaded question, but do you think that's still true given all of the work that JPX has done recently?
Yeah, obviously, I mean, this is spanning over a decade, right? These changes, at least for the last 15 years. I think one big driver, obviously, was the launch of the Nikkei mini contract, right? Obviously, I mean, there was always an active arbitrage participation in Asia between OSC and SGX, for example, right? And that is always tech heavy, right? So from that perspective, I think that the people that were trading at the time, they were doing similar things at the time, quite advanced things already, right? But it was just a bit more quirky and a bit more, let's say, less transparent. Whereas now, obviously, given the fact that this is, I mean, again, right? I would say, obviously, tech-wise, in terms of like being a modern market infrastructure, right, is pretty much on par with the rest of the world. Definitely. And we see that, of course, also with the changing face of the traders that came to our market over the years, right? So I do think that, also you have been quite instrumental in that over the years, right? And many other clients and the whole ecosystem has evolved and developed so much from where we used to be. So yeah, I think we're pretty much there. And one thing is also that is strikingly interesting about Japan is Japan has been, I mean, what we see now with the whole COVID and these kind of things globally, the rise of the retail trader, as I call it, right? That has been a phenomenon in Asia that has been around for a long time, right? With markets like Korea, with markets like Japan, right? Where we still until now have a very high participation rate of retail, for example, in our mini futures contracts, right? Which still accounts around 25%. And the night session, which is very actively traded. These are things that are not necessarily common in other markets. If you look at the US or Europe, the night sessions, they're not as actively traded, right? Or it didn't used to be as actively traded. So all these things are coupled with correlated products such as development of the ETF markets, right? Which has also been the addition of the creation redemptions and making all these processes more efficient, I think have created a market that is pretty much what we see in any other market, which is the beauty of Japan. When people come and connect, is everything from the systems, right? It's pretty much flawless. The rules are transparent, right? And I think that's one big strength of the Japanese market, actually.
Indeed, and indeed, and it's an interesting dynamic about the retail participation, because as this is my personal opinion, just based upon my experiences, we have this strange dynamic in Japan where we have a lot of foreign participation and they come with a technology bent, and I think that is reflected from people like the JPX. At the same time, we have SBI, Chi-X, creating markets which drives competition and is technology oriented and all those kind of good things. At the same time, we have these retail brokers which are really from scratch, build up with new technology. And at the same time, we have this cohort of Japanese investors through more traditional brokers who don't have access to technology, who don't have access to modern algo technology and modern high-speed trading, and certainly some of the brokers, more traditional brokers, Japanese brokers, have come into the colo and electronic trading, but still there's a kind of lag. And so I always wonder how this would affect liquidity. And the point that Matthias just made about, a lot more, people kind of trading from home now because of COVID. I'm wondering whether that technology, evolution lag has a negative effect on the markets from a liquidity point of view. Would anyone like to? I'll kind of generally open that question. Would anyone like to offer an opinion about that dynamic, if you even agree? Yamada-san, would you like to give any view on that?
So your question is whether there's a negative impact from the technology.
I'm saying there are some players in the Japanese market who haven't kept up with the pace of technology change and are not able to compete. And at the same time, you have these new entrants being the online brokers. So is that a good thing? Does it affect liquidity?
I think that unique structure that we have in Japan is coming from these retail or traditional brokers, like all these Japanese brokers like Nomura and Daiwa and Mizuho and all those Japanese brokers whose retail clients age are above 60, 70 and above. So those people are not used to these technology. But at the same time, these brokers are facing problems now when these generations kind of shift and it goes 10 years, 20 years younger. Now, all of a sudden, these retail clients are not using these traditional brokers because these 50 years old, 40 years old, 50 years old know that they can just use the online brokers or more cheaper options. So I think this structure would change in the next 5-10 years easily. And then the rise of these new online retail brokers and including more newer firms like Line or these other brokers coming from other industries. So yeah, that structure I think would change in the coming years. And in that terms, these technology is only going to be an advantage for these investors when these generations kind of shift. And at the same time, also, I would think these retail brokers clients are also shifting some of their trading to like an independent financial advisor. So that's also another trend in Japan that is kind of replacing the traditional retail brokers. So I think, yeah.
Wow. Yeah, interesting. Lucy or Matthias, do you like to offer an opinion?
I think we should look at which type of the products attract which kind of participants, right? So if we focus on the retailers, they're probably not able to do much of the derivatives. They probably focus on the equity side only. So from the JPX, the TSC data, still probably about 30% of the retail investors in this market. And definitely Yamada-san just mentioned the online type of things. Actually trade, the cost is lower for them. It's actually happy to participate. And plus from the experience from the other companies. So because of work from home, they can actually able to access to the online system easier. So that type of thing, it's actually good. But I think that overall, if the technology side, Japan want to catch up as the financial center in the to catch up with the world, I think the system-wise cannot be Japan specific. I mean, for example, the RFQ or something, they should be more of you can have the more global scale. So when each of the participants want to come in, we don't need to build another bridge to connect to this product. So that is the thing. If we open up to trade more of different derivatives and introduce more of different products, yeah, the connection to the global consistency probably a major thing we probably need to think about. So that will be reduced of the cost if the investor or participant in this kind of the market, that will be a significant help for them.
Thank you. Matthias, you want to offer an opinion?
Yeah, I'd just like to add a couple of points. I do think actually that there's a good case for all participants in the market, right, including the face-to-face time and kind of brokers, right, in Japan, because they do actually fulfill the role of what we would call in the West, we would call that private banking in a sense, right, where they actually do cater to high net worth individuals in Japan, right, and they would not necessarily allocate time to sit down at a terminal and plan their wealth management, right? So from that perspective, I think this is good that we have a diverse set of players. We just have to balance, of course, and then have to juggle the demands of these different participants as a market operator. I think that is a bit of a tricky thing, right? If you keep the markets open all the time, not everybody will necessarily then want to support it because it's not necessarily what they're doing, right? But on the other hand, given how sophisticated, also I had the pleasure to spend some time with a Japanese online broker in my life, and even at the time, which is over 20 years ago, right, or roughly 20 years ago. They were already so sophisticated, and that's all driven by FX trading in Japan, right? Should not forget that Japan is still among the largest, the Japanese retail is among the largest contributors to global FX volumes. And that in itself, of course, lends itself to the adoption of technology, right? Because these are 24/7 markets, right? Basically, before crypto, we had FX, which was already running 24 hours, right? So yeah, that is also benefiting us in a sense, especially if you look at our night volumes, right? The evening session, you will laugh when we look at our data, for example, and the distribution, there is still retail in Japan trading until 3 a.m., 4 a.m., which is not as active, of course, but they do follow global benchmarks, right, and indices, as well as things like non-farm payroll and economic indicators, right, to participate. So yeah, in that sense, I think as diverse as possible, the ecosystem is pretty much key and great. It's just the problem is, as a market operator, to create a common denominator, because obviously the interests are not always aligned.
Thank you, and I think you make a fair point. I think you make a fair point, which is perhaps not everyone needs all of the technology, and your point about maybe having that cohort within a broader set of participation provides balance and diversification, those kind of things. So if I can follow that point, jumping around the agenda a little bit, then let's take a moment to focus on which elements of the Japanese market like that are unique and are good. The fact that there's dynamic between equities and futures trades, ETFs, kind of gaining ground. Anything that you can think of in your mind, which might be an anomaly from the point of view of trading technology or market, structure, which you would say, actually, yeah, we should keep this. This actually helps, even though it might seem a bit odd from one objective sense. Actually, specifically in this case, it really helps. So perhaps, Lucy, do you have some perspective on that?
Yeah, as everyone's openings talk about, Japan is actually one of the most liquid market, and everything, the liquidity is good, and it's not the ID market. The currency is free. I mean, not free. It's not restricted. So it's actually really popular among all the Asian markets. Yeah, that's what I think. It's definitely we need to continue for that, and But the thing I mentioned on the opening talk, I think the liquidity, where I can find the real liquidity, is really tough for me because of the tick sizing. A lot of high frequency trading in this market is actually occupy about 40 to 50% of the turnover. Actually, that is not true. It's actually the net of by the day end is not the real liquidity for us to get the position in or out. So that is something, the macro structure thing I want to highlight it. For us, it's actually not easy to get what we actually want to build in this, especially in the equity markets we have. Yeah.
Thank you for that. And Yamada-san, you have views? good things that should in Japan stay, even though they might seem to be anomalous?
I think it was interesting what Lucy mentioned just now about these liquidity that the high frequency trading firms seem to provide liquidity, but from her perspective, still is not enough liquidity in certain names. And I think that was a very interesting point, because I think specifically in Japanese equities, there are still things to be worked on, like the tick size that she mentioned, or the closing auction that is being discussed now. So yeah, I hope these things are just generally driving to a more or better direction. But yeah, I don't specifically have much to say about any unique anomaly that we should keep.
And so maybe there's a kind of neat, I think it's a neat way of coming back to Matthias on the two dynamics of, you and I have spoken before about trying to encourage investors who are not pure high-speed traders. Of course, you've mentioned before about the retail participation. So I'd like to get your say. I know just for the audience's purposes your view on that, but also the kind of dynamic of things like tick sizes, because they do have a kind of play. Wider tick sizes more profit, narrow tick sizes more liquidity. So give us your views.
Yeah. Just to the previous point, I just wanted to add one thing in Japan, even though it may sound a bit self-serving, right? But I do think that coming from Europe or looking at the US, for example, right? If you look at market structure and market microstructure, right, you will find that fragmentation is not always positive, not always good, right, for the better. And I think many of you can attest, especially the buy sides that are listening to this, that it's also difficult to source liquidity, even more complicated the more venues you have, right? So I think in Japan, one anomaly, if you want to say so, right, for a G7 country would be that we have one big fragmented market, a non-fragmented market, right? Which is, in a sense, a really good thing. And I do think that the trick there is just not be complacent about it and just continue to develop and strive forward, right? Which is, brings me to your point with the tick size reduction, right? I think that is just sheer demand from the buy side, right? Obviously, this also very difficult again because we rely on market makers that are natural partners of exchanges, right? Obviously, the extended arm of us that provide the liquidity, right? Liquidity providers are pretty much key to make everything happen. So if they can't get enough alpha, from the spread, right, then it's also a bit complicated, obviously. But yeah, of course, the idea behind this and the rationale is that to bring more buy side to the table, right, and engage more trading on screen, and then liquidity will just create more liquidity, right? So hopefully it will materialize. That is the rationale there, right? And to your point of having a bit of too many HFT players in the market, I think it's not necessarily always the case, because we always find, of course, there's evolution between firms, right? The winner doesn't always take it all, but there can only be so many winners. And bringing continuous amount of participants to the markets is generally good, right? The more people are on the table, the better. If there's a bias towards one form of participation, it will balance itself out in one shape or the other, I think. But of course, the motivation of us must be obviously to bring as many diverse players to the market as possible. That's very much clear, right? Sometimes it's macro driven, sometimes it's not in our hands, right? Hopefully, with the new leadership in Japan, we will see a lot more demand, a lot more interest in Japan, right? Going forward, and people being more interested, and basically. Yeah, product development, product innovation is pretty much key for that, right? I think the more products we have, the more room for more HFT players, the room for more buy sides, right? For more retail. I think that has to be on the core of our agenda, and then the rest will just follow from there. So yeah, so we are working on all these wholesale aspects, of course, right? As you know, with institutional players. Creating volatility as an asset class in Asia, for example, is another topic I could talk for hours, or single stock options and things like that, but I'm not going to bore you here. But I do think that, yeah, it continues to be our job, and is increasingly difficult, like for all of us during these challenging times, but hopefully soon things will normalize and then we can reach out to everyone again.
Thank you. And may I
Can I
go
add
ahead.
one
Please.
thing? Sorry.
Go ahead.
I just wanted to ask the panel's opinion, because one thing I just recall about the uniqueness of Japan is one of the trading hours and the lunch breaks. Because previously, when I was on the sell side and trading Japanese stocks on the program trading desk, these Japanese investors used to do these or still do these lunch break baskets that I'm not sure if Lucy is active in trading these lunch basket trades, but also concerned on the panel's opinion of the market hours extending or nighttime tradings for the equities. Would that increase the liquidity or not? Because I think people have a different view on these trading hours and liquidity.
Well, the lunchtime basket actually still happen these days. Is majority from the domestic investors. It's actually helping the liquidity, but actually really VWAP benchmark. So it's actually not that will bring up another special unique things in Japan, the volume curve. So in the Japan volume curve is like 6% for the opening auction, about 2-3% for the PM session open auction, and then squeeze to 16% of the volume of the day at the last print. We cannot really say that it's a closing auction because it's just like a 1 millisecond thing of the print. So that brings out the Yamada-san's the topic of are we going to introduce a proper closing auction that can improve the transparency. And actually for most of the participants, passive flows should be like that to have a proper standard size of the auction at the close. That's what I'm probably missing a lot of points, but that's a lot of topic we can discuss. And the tick size wise, to answer for Matt earlier, because tick size, if it's narrowed down, actually each of the depth of the individual, each tick of the individual depth is actually shrinking. So for us, if we want to buy a really chunk, so for long only people, they actually signaling really big way, so the price can really run away from us. So that is another question. Are we going? Are we going to have a kind of a aggregate dark pool from the exchange wise? So I think from US or UK, they actually have an aggregate dark pool. So each of the brokers, they can build in and they can link to that dark pool. So when we're trading, it's actually for us, if we meet the upside side, it's actually for us we can get liquidity and we're actually not signaling that much. It's kind of like we just aggregate the liquidate or posit or each of the brokers at that pool. So I think UK have a system called BIT. That type of things are we going to introduce in Japan? That would really help for the potential liquidity as well. Yeah, that's from me.
If I may offer a perspective before I let Matthias step in, I can see if Grenady wants to say something. You know, all of these things, you know, lunchtime trading, nighttime trading, you know, tick size, all these kind of things. I think they're great, and definitely, absolutely, they generally contribute. I think the challenge with Japan is that the rule book was written 40 years ago, and the rule book hasn't been updated, and so many of the articulations of these good ideas are just really painful. You know, and the closing auctions, one example, you know, and those kind of things. So my wish for Japan is that the FSA would sit down, tear up the rule book, and start again on the basis of today's technology and today's trading practices, both locally and globally, and rewrite the world. And then I think all of these things would just become much easier for us to do, and we wouldn't have these kind of challenges. But anyway, that's just my thoughts and opinions. But Matthias, do you want to finish it off and answer the question?
No, actually, I just wanted to I mean, obviously these are all valid points, right? And I think it's great that we have this forum to discuss this, right? But yeah, obviously, of course, right? The lunch break has been around for a while, and the people like the lunches. Unfortunately, they're getting shorter and shorter, and I wonder how much lunch they can fit in these short hours. But from a trader's perspective, of course, we also must see. I mean, it's not always the most efficient way, right? But there's also trading opportunities, of course, that come with open and closes, right? So from that perspective, obviously, there's something that some players like, some players don't like, right? But yeah, I guess in the long run, it may be abolished at one time, right? And it's probably the evolution of markets will go in that direction. Same goes for the holiday trading, right? As you may all be aware, we're gonna start a holiday trading, and we're very excited about that because Japan has a lot of nice holidays, right? And but we will open and then some of those, and that is just again a request by our stakeholders or the people that are participating in our markets, especially the online brokerage community, right? That is very much interested in opening up, and on the other hand is also from a risk management perspective, right? Pretty much key for Japan to have a not have so many closed days, right? We saw it last time at the Golden Week, which was 10 extended days, which was it's ludicrous, right? Because things like that shouldn't happen. So hopefully that will normalize the situation a bit, and we find a good balance. Just wanted to say that.
Thank you very much. We've gotten through a lot, but we've also not gotten through half of the agenda that we thought we would, which is fine. And so we're kind of running out of time. So I thought I'd keep the last question for a topic which, given its trading technologies, if we didn't include it, then it will be remiss of us, which is crypto. I think it's fair to say crypto, from a regulatory point of view, was encouraged a few years ago, and it was seen as a kind of interesting new asset class that perhaps Japan could lead the way in the country, in the world, and be super kind of forward thinking. But then there has been these issues, empty GOCs and other issues globally. And so there's been some cooling of support and the perspective across the world, not just in Japan, but across the world. And so, my question to the panel is whether we think that crypto assets should be brought onto regular platforms, they should be normalized within the current, architecture of regulation and infrastructure and technology, in the same way that, the evolution of some of the more interesting derivative products and ETFs have been, or whether crypto assets should be regulated separately. They should be kept away from, normal markets, still participated in, but done separately. And in general, your views. So perhaps I will start with Lucy. Why don't you give us your opinion on crypto?
That's a pretty interesting topic. But if we trade in crypto, we need to get multiple countries' approval because we are based on so many different countries our fund is registered in so many different countries. But if all that is resolved, I think crypto should be built in each of the products. When you do transaction, they actually need to be settled in crypto, right? So that will be the high tech to as I mentioned, the global standardized things people can easily access. So firstly, we need to get the regulatory things all solved out, and including the government, like China just anti-crypto, right? So that type of thing all solved out, and then see the technology side need to meet the global standards and to all the products. That's my 2 cents.
Thank you. Interesting. So not just trading, but also in terms of the overall infrastructure for settlement, payments, certainty of delivery, all these kind of things should be in crypto. It's an interesting comment, of course. Then perhaps Matthias, would you like to give us your view?
Yeah, sure. I mean, we can only talk so much about it, but some of the observations we do, of course, right? I mean, obviously the initiatives in Japan by the Bank of Japan also for digital yen, right, and things like that. So that is one part of the infrastructure that's evolving. Generally, of course, also in what shape and form stocks should be expressed, right? There's this whole digitization aspect, right, which is obviously interesting, and we monitor that. We have also looked at distributed ledger technology ourselves, right, with some sort of proof of concept. So we can see that obviously in the clearing and settlement space, there's a lot of benefits, right, that can be derived from implementing such technology. But again, of course, it has to be the whole ecosystem, right, that has to follow suit and to make that happen for a centralized market like us. But yeah, obviously, also optimistically speaking, obviously as a market operator, this is a massive opportunity, obviously, right? The question is just how does the regulator look at it, and whether they're comfortable with that. Also, there's of course the bias of the crypto players, whether they're actually interested in having a centralized market doing this, right? If like the core believers of this, they want to be decentralized, for example, they want to go to these DeFi platforms and all these kind of things. But I do think there's a very, very strong business case for a vanilla type of like stablecoin type of securitized products in Japan, for example, right? Like an ETF on a Bitcoin would be the biggest in the region, if not in the like in the world, probably overnight, right? I'm quite sure that this would be pretty much no brainer, right? The question is just like how to do that, and whether the people are comfortable with it. But I do think that, yeah, given the time, this is kind of inevitable that this will also establish itself more and more as an asset class, right? We know that already 50% of the global hedge funds are dealing with the crypto in one shape or the other. So I do think that the exchanges will follow suit, and that would include us at one point or the other. Unfortunately, we don't have a timeline for that, but we're looking at it.
Thank you very much for your view. Lastly, but not least, Yamada-san, what's your view?
Yes, like Matthias said, I think how the regulator looks at it is one of the main key thing initially, as which law or rule book should cover this, because we are not sure what kind of asset class this is completely, because people can consider this as a currency, or it could be more like a commodity. So then depending on that, different rule books and different laws would apply. So that's one thing that needs to be more cleared, and then by the regulator, how it should be covered. And then I think there's two important things that need to be considered and discussed. Is one is when we want to introduce these to these broader financial markets, then you have to think about the custodians. How would this be, kept safe, as in safekeeping? Because for an institutional investors to touch these, they need to have a safe way to keep these assets. And then the second that I'd like to highlight is that, well, especially when these assets like cryptos are being considered listed on ETFs, then what are like the proper prices that how can you evaluate, or I mean, when it's listed in multiple exchanges and maybe licensed and unlicensed exchanges, what is the price that these ETFs or assets should refer to? So that's the index side of the aspect that needs to be discussed. What kind of index, or what is the proper price to be referred to? So those are the two things that I think should be some key points to be discussed.
Thank you, Yamada-san. Yeah, interesting. And in my own conversations around the space, providers of digital wallets and the wallet technology sits beneath, the custody, or it's not really custody anymore, but for want of a better word. And indeed, pricing and market data distribution, these are all keys at starting points, right? So it's kind of interesting space. And doubtless, the world is about to change in a way that our, parents and our grandparents probably didn't experience before, until, with the exception of the Second World War. So it's going to be an interesting ride. With that said, I believe we're out of time. Only a minute left to go. Joy, if I can ask you, I don't think we have time for questions, but did you want to open it for questions, or should we close here?
Well, I think probably we'll just close it because it's end of the session and end of the conference. But I really enjoyed the discussion. Thank you so much, Sean, for moderating. It's a very lively panel and very comprehensive with view from both buy side and sell side. And also, I'd like to thank Lucy, Yamada-san, and Matthias for sharing your views and insights on Japanese market structure and technology innovation, and as well as possible digital asset trading going forward. So that brings us to the end of today's session and the two-day virtual event. So I'd like to thank all our speakers and delegates for participating. Also, a big thank you to our event partner, JPX, Japan Exchange Group, our gold sponsors, Citadel, Securities, Eurex, Hong Kong Exchange, silver sponsors, ABM Emerald Clearing, and Société Générale, as well as our media partners, CAIA and Argus Media, for all of your support in making this event possible. I thank you again for joining these 2 days of FOW Japan 2021. Hope you all enjoy the entire event and find it informative. So if you miss any of the sessions, don't worry, they will be available on demand. Certainly, we also welcome your feedback and look forward to seeing you in person in the future. So stay safe and goodbye. Thank you.